I will note that CMHC put out some of their mortgage consumer survey and other mortgage market data, and we're actually seeing variable rates eclipsing fixed rates. I didn't put it in this report, but I'll put it in next month's report. But basically, this is consumers telling us that consumers think that interest rates are going to fall because people are either taking 3-year fixed, that's the most common type of fixed right now, or they're taking the variable. And so consumers think that they'll be able to get a lower rate sometime in the next 3 years, which is important because Bank of Canada does pay attention to what consumer expectations are for rates. The big question mark in regards to whether or not the Bank of Canada can continue to cut is um, what the Fed's going to do. The Fed being the Federal Reserve or the U.S. central bank, and so um, this one's probably more important to pay attention to than pretty much anything that anybody else says in the Bank of Canada until the Fed makes a decision. Right now, there's it was originally priced in that they were going to cut earlier this week or last week at the FOMC meeting. They didn't. It was priced in that they would then cut at the July meeting, and now it's not. Now it's 77% likelihood that they actually just keep the rate where it is at the July meeting. You start moving out. If you go to the CMA Fed Watcher tool and you click to September, October, you start to see the likelihood of cutting a little bit higher. But it doesn't seem like the Fed's in a hurry to cut because the U.S. economy is actually surprisingly resilient against all of the crazy stuff that's going on.